over to Mr. Rohit Natarajan from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you, Faizan. Good afternoon, everyone. On behalf of Antique Stock Broking, I welcome you all for the NCC Q1FY21 earnings conference call. We thank the management for giving us the opportunity to host the call. From the management side, we have with us Shri R.S. Raju, Associate Director Finance and Accounts, Shri Y.D. Murthy, Executive Vice President Finance, and Shri K. Durga Prasad, Joint General Manager Finance. I would now hand over the call to the management for their opening remarks, post which we can commence the Q&A session.
Yeah. Good evening to all the participants. I am Y.D. Murthy from NCC. We will briefly tell about the first quarter results for about 10 to 15 minutes, and after that there will be question and answer session. I request Mr. R.S. Raju, our Additional Director and CFO, to give his comments.
Hello.
Yeah, please go ahead.
Good evening to all of you. So before going to the numbers, just I want to say about the COVID-19. All of you know that its impact entire global. So for the construction industry, its impact is very significant since the work is moving in different places. So similarly, the same impact is also there on the NCC, but NCC taken several special measures, and right from the top to the bottom, and the entire team is geared up to overcome the situation and to see the progress which happened at the projects. So accordingly, after the lockdown, there is a good improvement we've seen in the projects. So accordingly, the results we received more than what we planned in the COVID first quarter. And for the second quarter also, we expect that the same, the strength or the same, and the feeling. So in some places, there was an improvement in the containing this COVID-19, but in some places, day by day, some places it is coming. So, but management as a whole goes through the situation and containing the spread and carrying out the work. So first of all, I start from the order book. So in the first quarter, the company secured orders of rupees 2,592 crores. So as against our internal target is also 2,650 days target. So despite this COVID-19, good order booking which happened in the first quarter. So with this, the order book now stands at 27,916 crores as of 30th June 2020. So just I will read out how the division-wise the order movement happened in the first quarter. The building division has an order of 13,241 crores at the beginning of the quarter, which constitutes 50% of the total company's order book. Now it has come down to 13,009 crores, about 47%. The road segment has 10% to orders at the beginning, now come down to 9% of the total company's order book. Water and railways, it has 4,660 crores at the beginning, 18%. Now rose to the 6,814 crores as its share increases to 24% now. Electrical, same percentage is there, 6% beginning and also 6%. Irrigation, they have 8% orders in the beginning and at the end of the quarter 7%. And the mining, it has 7% too, and now it has come down to 6%. So this is the combination or ratio of the orders in various divisions of the company. So the total orders as at the 30th June stands at 27,916 crores. There is the order book, and besides these orders, the company also participated in various orders. Of course, because of the COVID-19, the orders in the month of March, April, May, June, the process in some places we experienced the delay. And the L1 orders, we have several and amounting to about 2,000 crores at this moment. Besides that, we also submitted various tenders. So for this 2,000 crores, we expect the LOAs in shortly. So that the order book line, as in general, we see that order book booking is comparatively better than the previous year in the current year. So now come to the revenues. In the first quarter, the company reported standalone revenues when I'm reading. The first quarter reported turnover of rupees 1,117 crores, excluding other income, and 1,211 crores, including other income, as against 2,213 crores of the previous year. So it shows that there is a decline by about 45% over the corresponding quarter of the previous year. So other income is reported about 30 crores, which comprise 17 crores interest income on loans and some 6 crores on margin money deposits, and some IT refund happened on under such refund interest income, interest receipt is also there about 5 crores, and the others comprise rental income and other miscellaneous incomes like that. So they total to 32 crores in this quarter the company and the income. So now come to the gross margins of the standalone. So in the first quarter, the company reported a gross margin of 19.87% as against 20.52% reported in the last year. As far as gross margins are concerned, though the COVID-19 impacted to some extent some projects, which roughly would be there about 1 to 1.5%, but still the gross margin in the company, the project reported a normal level without much effect on the gross margin level. And when it comes to the EBITDA margins, there is a decline in EBITDA margins from that of the previous year by about 2.4%. So this the decline, particularly on account of these fixed expenses such as salaries and administrative costs. So in this, mainly the salaries impacted the difference between the previous year EBITDA margin and the current quarter margin. When it comes to the PBT level, there is no leftover PBT in the first quarter because of the fixed cost like interest cost and depreciation. These two elements put together about a difference in terms of percentage is there about 6%. So thereby there is no PBT reported in this quarter. But at the PAT level, we have about 16.9 crores, which resulted on account of some interest, some income tax credit, which was happened in the first quarter. We have received some assessment order relates to the 17-18. So 18-19 assessment year. So wherein section 8A benefits given by the income tax department, which we claim, which the department we allowed, and which amounts into 32 crores, which we recognize in the first quarter. So as a result, the tax expenditure comes negative, 28 crores. The 4 crores is the tax on various joint venture profits. So as a result, the net profit comes to the 16.9 crores for this quarter. And interest cost in this one, you see that one interest cost or salary cost or administrative cost. In absolute terms, there is a reduction happened in this quarter because of certain measures taken by the company. and also because of the low turnover happening over the last year. So company has taken that measure, and the company also reduced the headcount of the employees, and also made some exercise on the employee salaries and this one. So as a result, there is a decline of 20% in salary cost in this quarter, and administrative cost also there is a steep decline happened in the administrative cost, and interest also improvement is happened. So which supported again the quarter at least to that extent. And going forward, these measures definitely will help the company to improve its ultimate profit margins. And come to the debt. The debt of the company is increased by rupees 141 crores in this quarter. So generally, it is a general feature of the construction industry about increasing working capital in the first quarter. So compared to the earlier periods, if you see that one, there is no much increase in the working capital in this quarter because the collections are good in this quarter compared to the normal level. The collections are good, and particularly the company received about 120 crores income tax refund, which relates to the two years or 3 years refunds because of the government special measures taken by the government to refund this IT. So it was happened. So we received 120 crores refund, which helped the company. So as a result, there is no much increase in the debt of the company at the end of this quarter. Now the debt of the standalone standing at 2,051 crores. For capital expenditure, there is no any capex. Only hardly we spent about 11 crores in the first quarter for the capex. Considering the present level of business operations. The cash flows are concerned for the first quarter and standalone. The cash used in operations about 13 crores. There is no generation from operation. We have used 13 crores, very negligible amount. Cash used in investing activities about 33 crores, and partly for the margin money deposit, and partly for a loan to the subsidiary company of 18 crores. So now cash. So we usually these financing activities we generated from the financing activities to meet the above two line items. About 42 crores we laid out on hands on the because of our working capital limits. From the working capital limits, this amount we have met that one. As far as the working capital is increased by about 176 crores in this quarter, which what I explained already, which is support those this one. When it comes to the trade receivables, there is a decline slightly in the trade receivables in this quarter. About 40 crores or so is there in the decline from the previous level. About the liquidity of the company is concerned, though there is this COVID-19, which has some interruption, which has some resulted in some delays in the processing of the bills by the client. But company somehow could manage these things and not seen any pain in managing the payments in the COVID-19 time, and maintain the liquidity. There is no defaults anywhere. All the payments met in time. There is a timely repayment of the loan and timely meeting the interest servicing. And the banks also asked us whether you are interested to avail any deferment of the interest and other things. So, but in general, we have not seen, but subsequently, and there is another circular which received. Our colleague, Mr. Y.D. Murthy, will explain about that aspect at appropriate time during telephone call. But in general, the company is not offered much for the for the deferment of those things. And nowhere also the other ones also we are not taking a deferment. Though some companies offered. The deferment is only coming temporary for 3 months or 6 months, but not for the longer period. So there won't be any good benefit for the company. So therefore, we want to pay on time. So we are not seeing any financial difficulties in this period, and also for the next 3-4 months also the company not foreseeing any problems in meeting its financial commitments. So this is in general about the company, and the specific items about any other aspects which anybody has. That we will answer.
I will give you a few points. The loans and advances to subsidiaries and associates stood at 582.88 crores, which is more or less the same like first quarter of last year. And investments in associates and subsidiaries is at 889.25 crores as compared to 919.27 crores in the previous year. So the exposure to group companies remains more or less same at 1,472.13 crores. Mobilization advances stood at 1,262 crores as compared to 1,487 crores in the last year. And retention money is 2,280 crores as compared to 2,249 crores in the last year. Cash balances at 334 crores as compared to 196 crores last year. The company is very carefully managing the liquidity position and seeing to it that enough surplus is available in our books of accounts, and we are able to take care of all the payments without much difficulty at any point in time. That is the motto of the company, and we will stick to that. And also we have taken a COVID loan of nearly about 152 crores from the banking system as per the guidelines given by the Reserve Bank of India. The COVID loans were given up to 10% of the fund-based limits of the company, and the two at an attractive rate of just MCLR, 1 year MCLR without any markup. So these loans also have helped us to maintain enough liquidity in the books of accounts. And also the Reserve Bank has come out with a circular saying that moratorium can be given for interest payment for the first 3 months initially, and later on made it into 6 months. The first initial 3 months we have not taken because what it means is at the end of 3-month period, that is in the 4th month, not only the first 3-month interest but also the 4th month. Put together 4 months interest you have to pay in one go. That is going to be very taxing for the company at that point in time. So we prefer to pay the interest every month so that the pressure on the company will be minimized. But later on, Reserve Bank has come out with a further moratorium for another 3 months up to August 2020. And also, they said these interest can be converted into FITL, Funded Interest Term Loan. So looking to all these aspects, we have requested about 4 banks in the consortium to permit us the moratorium and also convert into FITL at the end of August. One more thing that I would like to bring to your notice is the Finance Ministry has given some relaxation to construction companies in the sense that if the project progress is going on, based on the progress of the project, the performance guarantees can be brought down on a pro rata basis. That means if the project is say for 100 crores and we have given a performance guarantee of 10%, that is 10 crores, and if the project is already completed 50 crores, so the performance guarantee will be reduced to 5 crores. So that is a big relief to us. Though by giving a letter and asking for reduction in the bank guarantee value, we have got back about 157 crores of bank guarantee limits available to us, the number one. And also the bank guarantee commission on those that portion of the bank guarantee will not be paid. That we have taken full advantage of this facility extended by the Finance Ministry. Cash and bank balances 334 crores. I think I told already. The inventories, raw material 469 crores as compared to 497 the previous year. And trade receivables, my colleague has already covered. So we are taking a lot of measures to see that the COVID-19 impact is minimized in our operations, and that philosophy will continue. Second quarter, we are definitely going to do better than the first quarter. And as things stand now, we are at around 50 to 60% of our rated capacity. And because of the shortage of labor at various project sites, works have been hampered to some extent. Now the second quarter again, rains are also there. Slowly the workers are coming back to the project sites. We are confident we will be able to reach 90% capacity by September or so. And so the third and fourth quarter are going to give a substantial top line for the company. But based on the uncertainties involved with the COVID-19, despite having a good order book of about 27,000 crores, the management felt that we cannot give any guidance for FY21. Every quarter we will be apprising our investors and our brokerages and the bankers and others as far as the progress of the company is concerned. But we are confident things are moving for us, and in fact we are able to manage our liquidity very nicely. As you could see, the debt has gone up by only about 140 crores compared to the previous quarter, which is a very substantial improvement, good thing. Whereas in the first quarter of last year, the debt is as high as 2,330 crores. So all efforts are being made to conserve cash and see that we will be able to take care of the problems associated with the pandemic. Now I give below the details of the finance cost. The finance cost for the quarter is about 115.85 crores. In this, interest on term loans is 88.95 crores. Interest on the cash credit and WCD is 45.63 crores. Interest on mobilized advance is 30.26 crores, and interest on others is 0.87 crores. So total interest outgo is about 85.71 crores. BG commission 25 crores, LC commission 3.42 crores, other bank charges 1.7 crores. Total is 115.85 crores. That's all from my side. Now we can take questions from the participants. I request the participants to not to ask more than 2 questions per participant, and also we will close the discussion after the 20 questions are asked. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Mohit Kumar from IDFC. Please go ahead.
Yeah. Good evening, sir. Thanks for the opportunity. So my first question is, are all the sites opened up, in the sense the sites that all work at all the sites are moving, or are there significant portion where there is no slow orders and the work is not possible during the COVID time and they are taking time to start?
So, almost all these sites are opened up, and some very minimum number of sites where the client or the local forces So based on the situation of the COVID-19, if any restrictions are there, they're very meager. And we have made analysis on that one. So here, our projects, more than 70% are in operation, are there about 20 projects, and 50 to 70% level of operations are there about 23 projects, and in 30 to 50% level of operations are there 30, and 0 to 30% in the level 45 projects are there. So compared to the first quarter, May and June, in the July month, this is the number what I explained for the July month, and there is an increase for the previous month of May and June. So complete to not happen, maybe some 3 projects or 4 projects more or there are also small size projects maybe there. But in general, there is a work momentum in all the sites. So, but wherever the more manpower workforce is there because of some lack of the manpower, full manpower, some low-level operations are going on.
Understood. My second question is that there was a significant amount of net working capital was stuck in EP. Can you please update on it? And was the number rupees 10 billion roughly?
Now the working capital now stuck in the AP projects about 898 crores is there, including the projects which are running in the AP.
Okay, sir. As I believe, as of December 30 to 31, 2019, third quarter, 650 crore unbilled revenue, 688 crore receivable, 306 crore retention money pending from, and against that we have received 481 crore of mobilization advance. Do we have this a similar number for this quarter? And
in the similar lines.
Yes.
So now tell me what number. So
we had 650 crore of unbilled revenues, 688 crore of receivables, 307 crore retention money, and against which we have 481 crore of mobilization advance. So net working capital was roughly around 10 billion, which was stuck.
Net working capital how much? Net working capital how much?
11 billion, sir. 11 billion.
Okay. Now I read the numbers, what the figures we have. So the trade receivables now we have outstanding about 552 crores. Retention money about 296. Which held about 52. Work in progress 505. And mobilization advance 196. And 1,209 is in due from the client.
Understood, sir. Thank you, sir. Thank you.
Okay.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you. Sir, I understand that we cannot give guidance, and broadly you have explained in terms of the improvement in the labor and the utilization at all the sites. So broadly, just trying to understand in terms of the whatever revenue and the EBITDA margin what we did in this quarter, all the next 3 quarters, can we see the sequential improvement on the top line and the margin front? Broader number. I am not asking any guidance on that front, but it will be sequentially should be improvement should be there.
As far as top line is concerned, we expect improvement over the first quarter number, top line. So as far as margins are concerned, we expect the same level of margins of gross margin, but because of the increase in top line, the EBITDA margins will be improved from that of the first quarter. So once EBITDA margins improve, the PBT and the impact we expect in a positive manner. So certainly the second quarter will report more than what we reported for the first quarter in the margins front.
Okay. And sir, in terms of the broader, in terms of the debt level right now, what we have 2050 crore. By end of the year, should we expect some reduction should be there on that front? And lastly, on the update on the Sembcorp and the Taka, that's it from my side.
So on the debt front, we expect a reduction from the debt front from 2050 level, and we have certain, apart from the operation, certain issues or certain proposals. So if once those proposals get some significant reduction will be there in the debt. Otherwise, also there will be some reduction at the end of the year would be there. We expect at least 1,800 to 1,800 levels the debt. Since we have certain claims we received last year, those claims we expect one or two in this year. So about Sembcorp and Taka, my colleague Mairumurthy will explain.
Yeah, as far as Sembcorp is concerned, the matter is in the arbitration. The arbitrators wanted additional time, and with the approval of the High Court, now the arbitration is likely to be concluded by September 2020. That means either 2 months from now, and the award is likely to be given. We believe we are in a strong wicket because our retention monies and our final bills and our bank guarantee amounts and cash by the client are lying with them, and the maximum leviable penalty on the EPC contractor as per the EPC contract signed by us is about 292 crores. So the monies that are payable to us are about 700 crores, plus the interest it will come to 1,000 crores. Assuming the maximum penalty is levied on us with interest, we should get on a net basis, we should get about 600 to 650 crores. So we believe we are in a strong wicket. We are also eagerly waiting for the arbitration award to be declared by September. As far as Taka is concerned, already the arbitration award is there. We have contested that in the Singapore court. Not much progress. Even the other party, Taka, also contested. Both the things have been dismissed. And now we have opened a communication channel with Taka for out-of-court settlement. And the discussions are going on. We already made a provision of nearly 100 crores for this arbitration award. We are confident it will be closed within that provision that made, which means no additional provision will be required.
Thank you. Mr. Shah, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good evening, sir. So just wanted to check first whether the debt number includes the interest which has been deferred under the FITL arrangement, or that is over and above. And what is the interest which has been deferred so far?
You see, initially they have given for 3 months. That is for the month of March, April, and May. And we did not take that deferment. Mainly because of the reasons that I already explained. In the 4th month, we have to pay 4 months of interest. So all these 3 months, all the interest has been already paid by us. Later on, when the Reserve Bank came out with another extension period of 3 months, covering May, June, June, July, and August, and also linked it with the FITL, what we have done is smaller banks where the monthly interest outgo is only about 1 crore or 2 crores, we decided to pay off. Bigger banks where the bigger loans are there and interest outgo is higher, that is about 1,200 crores of our limits compared to our total limits of about 2,000 crores. We have given them letters saying that we would like to avail the benefit of moratorium, and also subsequent conversion of that moratorium amount, the interest amount, into FITL, that is funded interest term loan. So by the end of August, banks will come out with some proposals for converting these amounts into FITL. We are waiting for that.
So for the month of
Please.
yes, so I'm saying for the month of July and August, we would not have paid and instead have given them the letters for deferment.
Yeah, yeah. For June also.
June, July, and August.
5 banks out of all the consortium banks.
An amount amounting to 1,200 crores. 1,200 crore worth of loans is where
right.
we have approached the banks for deferment
Yeah.
starting June.
Yes, that's right. That's right.
Right. So second question, just wanted to have a sense of breakup of the order book in terms of the AP and non-AP order book, and within AP, what has been the progress in terms of the projects and the outstanding order book, and what is the view of the government now on the residual orders? That's it from my side.
మీరు చెప్తారా సుబ్రాజ్ గారు?
Yes, system. So now about the breakup of the order book, about 4,400 crores relates to the AP, and the balance 23,000 crores relates to other states. So AP 4,044 and some orders, roughly about 1,200 or so, are active projects and which are in execution, and some projects which relate to the AP TIDCO. AP TIDCO, those projects kind of asking to do, but we are waiting for the payment, next slot payment. So once they release the payment, that we will start those AP TIDCO projects. So like that, the 4,442 crores orders are there. This is the AP. So about other projects of other states, they are moving, and there won't be any major concerns or major issues in movement of those orders. About payment.
Just to add to what Mr. Subramanian is telling, the projects in AP, 4,400 crores, we can put them in 3 buckets. That is affordable housing, capital city, and projects other than these two, that is ADB funded projects and some Amrit projects. As far as ADB and Amrit projects are concerned, there is no problem. Work is going on, payments are coming. As far as affordable housing is concerned, the work has been stopped a long time back, mainly because the government is not making payment of our dues at the point in time. In fact, they called for a discussion. All the affected contractors, that is L&T, Shapoorji and NCC, and we had a discussion and we made it clear to the government, you pay our bills, outstanding bills, and we start the work. They made some payments, about 100 crores we received in the month of March, and the work has commenced. Now the real problem is coming as far as the capital city is concerned. In capital city, the projects pertaining to the legislative capital given to us at Amravati are continuing. We are constructing MLA quarters at Amravati, though that work is almost 90% complete. But we are doing one secretarial building in Amravati that is likely to be cancelled because the administrative capital is going to be in Visakhapatnam. That is about 470 crore order. We have done about 10 to 15%. The payments have to be received by us. Once the order is cancelled, all our bank guarantees will be returned to us.
Thank you. We'll take the next question from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question. So 2 questions from my side. So just wanted to basically get a broad number as to currently that we are standing in the month of August. What will be the execution level in terms of the percentage of pre-COVID activity? So are we at 50%, 60%, 70%? And similarly, what will be the labor availability at this point of time as a percentage of pre-COVID levels?
Yes, sir. As far as the labor movement is concerned, compared to the pre-COVID-19 or lockdown period, now there is a movement in the labor. Now the labor is coming to the projects. There is a momentum, and we are also gathering wherever the labor required to come from far off the states, and we are searching for the local labor. Now we are trying to deploy the local labor in place of the far off places as an alternative. So in such a way, about 60% to 90% level, the labor which are required in that percentage level, now the labor is available. But after coming with the projects, sometimes some again COVID, some positive, some local restrictions, sometimes some interruptions are there. But despite that one, there is a good momentum, particularly in the Maharashtra. Though Maharashtra is more the COVID-19, but still the project progress, the momentum of the labor is good in the Maharashtra. So our people are managing the works in Maharashtra state, all these flyovers and other metro works. So as far as percentage of work is concerned, we expect for second quarter about 70% to 80% level of normal operations. At the same time, the rain, in some places, in some projects, some rain impact also would be there. So considering all these things, we expect 70 to 80% to level of operations compared to the same quarter of the previous year.
So you mentioned labor as 70 to 80% labor.
Labor?
How much is labor availability right now?
Much labor, that is total number project-wise only we see the labor. In terms of percentage, you can say 70 to 80% percentage is available on average.
Sure, sir.
There may be full labor available where we require only 70 or 80. But some projects require 1,000, some projects require 2,000, like that would be there. So like
right,
that.
Sir, I'm sure. It will vary from project to project, I agree.
Yes, sir.
So my second question is, sir, you mentioned that basically, just wanted to understand on the overall payment cycle. So you mentioned that, of course, around 890 crores of our payment is there with the AP government. But other than that, are we getting payments on time from Maharashtra government or from other projects, other states that we have projects in? And if we are getting payments on time, then I wanted to ask that, do we see any liquidity problem that we are trying to avail this moratorium? Because if we are not facing any liquidity problem and if the payments are being made on time, then why do we want to avail the moratorium at all?
Yes. So moratorium, why we are availing moratorium, there are two benefits, two aspects. One is the loan, what we avail from moratorium carries the low rate of interest. That is about 77.5%, which you can use for replenishing the high-rated loans, that is WCDL loans. So once you put those things, at least 2 to 3% saving would be there in the interest cost. That is number one. Number two is we don't know about the next 6 months, 9 months, the position. Things are uncertain, isn't it? So keeping always some reserve is not good, isn't it? So using of that loan or not, that is a management precaution. Go with so many precautions. In such a way that would be there. Any other point from your end?
Earlier question, the first part of my question was how is the payment from other government bodies apart from AP, Maharashtra, UP, Bihar, any other projects that we are doing? How are the payments from those bodies?
In this quarter, the payments are happening. So particularly from the Maharashtra, payments are happening so that the government has an objective that the construction work should move faster and you should release the payment to the contractor. Contractor in turn should release the payment to all the down the level, ERW, subcontractor, suppliers, so that the economic activity should be there. So in such a way, the government has an objective. In some places, the client calling us and releasing the mobilization advance. Though the project is not placing work front and other things not ready, but despite that one, they are calling you submit immediately bank guarantee, take the mobilization advance like that. The certain objectives are there from the client side also to move money into the system. So which ultimately what we seen is not our payments, normal payments not affected. So in this quarter. So similarly, in the second quarter also the same thing will be there. How the government is giving priority to which sector it is giving. If we take all those things, this is the one sector providing employment. If the construction projects, unless if the project runs, then the employment won't be there for the Indian people, isn't it? So some priorities are there which helping ultimately about the flow of the payment from the client to us and from our end to the other levels. So you can see that there is no any default from our side to any of our payables or any of the interest payment in this one. So the same level we expect, and thereby the debt position may not rise from the present level to the end of this year.
And also, the Finance Ministry, as a part of the COVID-19 package, directed various government agencies like National Highway Authority, Airport Authority of India, and other All India Institute of Medical Sciences and various agencies to speed up the process of payment of bills by the contractors, for the very reason that we should put money into the system. Because when we pay the contractor, he will pay in turn to his suppliers, to his subcontractors, to labor and all that. So the wheels of the economy will keep moving. So that is also helping us to a large extent in terms of getting payments on time.
Thank you. Mr. Singhal, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Ankur Sharma from HDFC Life Insurance. Please go ahead.
Yeah, hi sir. Good evening. A few questions. One was on our targeted orders for FY21. So while Q1's been good, I guess because of the Kaleshwaram irrigation project, I'm just trying to understand, if you would want to give a number in terms of your order target for this year, and B, which are the bigger size, large size projects which you're targeting, which could be ordered out over the next couple of quarters. So is it one of the SIDCO projects? Is it one of the Mumbai Ahmedabad bullet train projects? So just wanted some sense on the larger size projects which you're targeting, or the segments where you think you will be winning most of your orders.
Okay. You see, a target for FY21 for order acquisition is about 10,000 crores. In first quarter, we already achieved 2,600 crores. So we are on target despite COVID. Orders have come to us, and the trend is likely to continue for the remaining quarters also. On the contrary, in fact, there could be some acceleration because once the pandemic is subsides or slowly comes down, the government is also very keen to kickstart the economy, and for that the infrastructure development, that is the physical infrastructure development, is going to be a major thrust of the government, and definitely we are well positioned to take advantage of those opportunities coming our way. You have rightly mentioned already the bullet train projects and also say the SIDCO projects, etc. We will definitely participate in that. We have tied up with other construction companies as far as the bullet train projects are concerned. They are big packages. Each package is about 15,000 crores, 20,000 crores like that. And as and when they call for tendering, we will participate. Likewise, we are seeing good opportunities in various verticals. See, we are a strong company with good visibility and good execution capabilities in buildings, roads, and water pipelines. And as you know, these three put together constitute about 75 to 80% of the order book of the company, and more and more orders are likely to come. Now they are talking of the Central Vista Development Project in the Parliament House and in New Delhi. We are already pre-qualified. We are participating in those orders also. Likewise, wherever opportunities are there, definitely we'll participate.
Another opportunity for NCC in the mining segment. So our company entered into the mining vertical, and we are doing some works. And earlier also we participated in the MDO projects. At that time, we don't have the qualification to participate on our own for the MDO mining projects. Now we got the qualification for a medium size to the medium size projects. Now the Polyndia Limited subsidiary companies are there, and they are coming out with MDO projects. Nearly 40 projects are in the pipeline, and some of the tenders we worked already. So now we are concentrating on to participate in the MDO project. They are the bigger size and for the longer duration. Longer duration means 20 years, 25 years, that is duration to develop the project and extract the coal and transport the coal up to this railway siding. So this is from zero date to the end date, the total activities they outsource to this developer. So here, the NCC being a construction company has construction experience, whereby it has an added advantage to develop the project. To develop the project initially, we have to develop the infra facilities there. We have to construct, if required, the coal handling plant, conveyors, bunkers. We have to erect the substations. We have to erect the workshops. We have to construct the townships for 25 years to stay by the employees and workmen. So these developments, NCC has well experience. Thereby, for the NCC, it is an advantage to develop at a faster rate, using its expenses and saving the cost. Such a way it is there. So thereby, we want to participate in the size of the project is about 10,000 crores, 15,000 crores, 20,000 crores. That is the size of the projects. So every year about 500, 600 crores turnover will come from each project. So that is one opportunity the company has. So now the company is doing homework on such vertical to participate.
Okay. And great, so thank you. And just a second question on our current order book of close to about 28,000 odd crores. Could you break this into how much is from states, how much would be, what percentage would be from central agencies, and how much would be private? Sorry, I can't hear you.
So now about the state government projects will be there according to the earlier calculation. About 60% would be there, and central government about 10 to 15%, and the PSUs and government department would be there about 20-25%. And private, there are no any private, if any 1 or 2% would be there. The state government share is more in the order book.
Right. And just to kind of clarify on Vibhor's question earlier was that payments from state have continued on a normalized level. So you're not seeing any delays there. No unusual delays on the payments from the state. Is that the right understanding, sir?
Yes. So except AP, the other states' payments are coming more or less on time.
Okay. All right, sir. Great. That's all from me.
One request, we have been talking for the past 55 minutes, and now we will take only 2 more questions so that we can close it by 1 hour.
Sure, sir. Thank you. We'll take the next question from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, sir. Good afternoon. So just 2 questions from my side. First is, what was the total execution in this quarter, including the international subsidiaries that we have?
What is the execution amount?
Yeah.
Total execution, including international. It is 1,249 crores.
Sure. And so just wanted to re-verify 2 numbers. Our debt is 2,140 crores. Is that right?
No, 2,050 crores.
2,050 crores. And out of the APA orders of 4,400 crores, 1,200 crores orders are active currently. Did I get the numbers right?
1,200, more than that are there active. Active projects, you can take 3,000 crores.
Okay. Sure, sir. Thanks. That's it from my side, and all the best.
Thank you.
So this will be the last question.
Sure. Ladies and gentlemen, we'll take the last question from the line of Chirag Singhal from First Water Fund. Please go ahead.
Yeah. Thank you for the opportunity, sir. So I just wanted to confirm on the execution level. So you mentioned that in Q2, the execution level will be around 70 to 80% of the pre-COVID level, so or the last year. So you mean 70 to 80% of Q2 of last year, or the normal run rate? Because Q2 is generally weak. So if you state 70% of Q2, then we are near about, let's say 100, 200 crores plus Q1.
So same the same quarter of the previous year, the 70 to 80% level of second quarter of the previous year.
You see, if this Q2 of this year is weak because of monsoon, Q2 of last year also will be weak because of monsoon.
So that's right. That's
so we have to compare the same.
Right.
Yeah.
Okay. So in turnover terms, it will be like 100, 200 crores plus the Q1 if we say 70, 80% of the last year Q2.
About 300 crores plus would be there.
Mm-hmm. Okay. All right. Thank you, sir. That's it from my side.
Thank you. Ladies and gentlemen, due to time constraint, we'll take that as a last question. I would now like to hand the conference over to the management for closing comments.
We thank all the participants for their enthusiastic participation, and we are also enriched by your very attentive participation in this. And if any questions are not answered, please send your queries by email either to me or to my colleague Mr. Durga Prasad. We will see that those questions are answered. And I thank you one and all, and also thank Antique Broking for hosting this call.
Thank you. On behalf of Analysts Stock Broking Limited, that concludes this conference. Thank you for joining us.
Thank you all.
Thank you.
Thank you all, Faizan, Rohit. Thank you all participants. Thank you.
Thank you. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.